Good afternoon and welcome everyone to the Trading Talk, the Uncensored live Q&A session. My name is Danny and I will give you the webinar today. Okay, so the first question is, how far from the entry should I place the stop loss and take profit? Okay, excellent. Then the second question is, how long should I hold a position for? Great. Third question is, what are support and resistance? Last question is, what is a trading plan and how can it help with trading? Okay, excellent, excellent. But I think that today we're not going to answer the questions in a linear order because it would be easier to explain about support and resistance to find the entry, and this one is more related to the plan. So I think we're going to combine some of the questions in here. So let's begin with the support and resistance to better understand what they are and how can they be helpful to us. We're going to use the web trader, as I like to say. This is an embedded platform in our website. It doesn't require you to install or download anything. Just by logging into the website with your email and password, and you're going to get to here. Sometimes it looks like that, but you can fold it down with the two arrows at the upper right, just like that. And you can also change the layout from one chart to two charts or three charts, depending on what you need. All right, so the question here is, what are support and resistance? So as many of you know, support and resistance are the edge points of every chart, which can be found in various time frames. Maybe we'll select one of the metals and maybe gold. Okay, it doesn't really give us what we're looking for. Let's see the days. Excellent. Great. So we're looking at gold. We're looking at daily candles. We're also gonna click on buy or sell to enable the order entry. I don't think we needed to answer the question. I will use the menu in here a lot, but not now. I think it's easier to just look at it like this and to understand a bit better about support and resistance. By the way that I am moving the chart left and right is by clicking and dragging the chart. And the way that you can stretch the chart up and down is by clicking on the column price and then just dragging down or up. This way you can also click and drag the chart to better customize it for your needs. Now, we're gonna help emphasize support and resistance using the nice inventory in here. And if you click on the arrow, you can find a lot of useful things for you to place on the chart. You can, for instance, leave a text. Maybe we'll write here that this is, just as an example, the support. Okay, and we'll place it here. Of course, we're going to explain everything, but just to show you the idea in here. So we've got resistance, we've got support. Okay, and we're also going to place those ovals to help us understand better what this is about. Also in here. And there are further lines which we are fully aware of, which we will capture right now. Okay, and we will use the price line. We're going to click here on the arrow. Then again, we're going to click on the price line. Then again, clicking on the chart. And there are several ways to modify the value on the lines. Okay, what you can do is you can click and drag like this, right? Clicking and dragging. But if you would like to land it on a specific number, let's say we're looking for the 3,500 line, okay, for that to be, but we're not getting a flat number. As you can see, the number after the decimal is 31. So if we would like to flatten that out, what we can do is we can click in here, and then we can click in here, and just type 00 and click save. So this is one way. This is the second way. Sorry, the first one we said that we can drag it manually on the chart. And the last way is basically similar to the second. We can just place it anywhere, maybe in here as an example. And then if we're looking at this level in here, let's suppose we're going to enable the crosshair also, clicking here on the arrow. It's exactly in the middle of the toolbar, so we're going to click it, and then we're going to click on crosshair, and now we're getting the numbers from the candles. So we can simply see that if we're pointing on the green candle in here, which happens to be the 6th, the beginning of the month, we can see that the high here is 34.85. Now, if I would like to place it exactly at 34.85, and again, I don't want to go through the dragging part. I just want it to be there right away. So as you can see, there is a white cogwheel right here. And if we're going to click on the line to select it, and then we're going to click on the white wheel to get to the coordinates, and then we can simply type here 34.85, and then our line will be exactly there. Another way, okay, let's answer the question and understand the logic of what's happening here. So as you can see, I've marked in two ovals, one for the resistance, one for the support, and those are the edge points of this so-called area. Okay, maybe we'll use a rectangle to help emphasize this area a bit better. So again, the same way we've placed the lines, we clicked in here, we clicked on the arrow, we clicked on the rectangle, and we can also clean it up a bit because this pink area here doesn't really allow us to, it doesn't really, doesn't always play well with the, with the background. Okay, so we can click it, select it, and with a white wheel, we're gonna click on background to remove it. And now when we're looking at this area, we can see that the resistance is the edge of the roof. We can call it maybe the roof of this room. And we've got the ground floor, which is the support. So we're going to click it again, click on the red trash bin to delete it, and we can continue. Now, there are smaller points, pivot points, which we can also mark with an oval. Then the way we can use the oval is we're going to click, and drag. Okay, then again, as we can see, we can place here another support line, and in here, which is roughly the middle of the area in here, and maybe another lower there. Now, it's important to understand that support and resistance can be found in various levels and can be significant more or less depending on the repetition of the asset, the instrument's volatility. What I mean by that is if we look at the actual value now, 3,297, we can see that we are somewhat in the middle of the area, right? And we can see that 2957 as an example is a value that gold was one time. Yes, it was one time from today backward until the 7th of April. Okay, but in here, it's also one time. I wanted to show you that sometimes in support and resistance, the instrument is getting very close to a certain level several times, which can make it a bit stronger support and resistance. And at the moment, we can see that gold basically climbed, that this is I think the highest value. This is all-times high. Let's change to months real quick. And now we can see that if we go backward to even years backward, gold has never been this high. All right, excellent. So with this in mind, how is this any help to us in analysis when we're doing analysis as traders? Okay, so we've marked the points. Okay, there are pivot points, and we can mark them on the chart with lines. Excellent. How is this helpful? Because we know that we need to make a connection here okay, between two types of analysis to understand a bit better how it works. So we've got technical analysis and we've got fundamental analysis. Now, typically, if I'm looking at the market and I see an extreme movement, extreme volatility, it could have a connection with something fundamental happening right now in the world. Could be related to the interest rate, could be related to any other governmental decision, which makes the instrument a bit more fluctuative than usual. All right, so support and resistance could be some kind of boundaries. I don't want to use the word boundaries. Let's try something else. They can be levels. They can be levels that when the instrument is passing those levels, we can assume something fundamental happened. Now, there are several ways to confirm that. And one of the nice ways that we can do it is by clicking on the globy icon in here for discovery. And in here in economic calendar, we can make the connection to the events. Let's clean the selection in here. Okay, a lot of things. And since we're trading gold, let's click on US to filter that out only. Okay, and now we can go back through the dates and to find the particular point that we're analyzing to try and make the connection. What made gold so fluctuative that it broke the support or resistance? Okay, now the way that it can help are several ways. First of all, let's write it down. Support and resistance are edge points of various time frames. When an instrument breaks support or resistance significantly, we can logically, there will be a connection for something fundamental that occurred. Okay, again, this is not always the case. Of course, there are different fluctuations and different level of fluctuations. We can see, for instance, that the previous segment is relatively calm related to what we're looking at today by the size of the candle and by the range of the candles. And we can see the different levels that we have. 3,500 between 2,900. Okay, so this is a significant difference. We can also click here on the arrow and, okay, we've got a trend line already. So if we click on the trend line, we're going to click on the support, click on the resistance, and we can see the difference in the percentage change, the difference in percentage. Okay, we can see that it moved from the general idea here. Of course, it took it some time. We're looking at days. This was the, let's have a timeline in here. So we're looking at from the 7th till the 22nd, right? And there was a change of 18, almost 0.4, 18%, 18.34.9. Okay. Now, this can help in various ways. One of the ways is to find a place to enter. Another way is a place for the stop loss and the take profit. And this is the main reason why I've explained it now instead of the first question that we had. Okay, so this is a resistance and this is a resistance. Let's give it another oval. Okay, and the reason that I wrote that it can be found in various time frames is because even if we switch to weeks as an example, weeks maybe not, let's try hours. Okay, you can see that even in hours, we can still find those edge points and we can mark them with a line. Depending on the trading style, depending on the strategy, depending on which time frame I'm analyzing, I can find support and resistance and make it useful. And like I said, we can always go back, make the connection, what happened fundamental, and just, of course, if something that happened is an event that has a scheduled reoccurring event, like the non-farming payroll or the CPI or any event decision that we can think about. So if something like that made gold break the resistance or support, we can assume that it can happen again, and then go to the calendar, be ready, and do our analysis. Now, as I've explained, this can be helpful finding our constructing the position and how can we use it. Let's first, I think, paste what we've got in here to our presentation real quick. So we'll be organized. Yeah, and we've got this. Let's make it 10. Excellent. Now let's look at the other questions and see how we can use support and resistance. Okay, so the first question is actually, how far from the entry should I place stop loss and take profit, right? And how far away? Let's look together. So we've got support and resistance to help us understand the levels that gold can possibly get to. Of course, again, it can easily break it if something fundamental happens. Okay, but let's assume that at the moment we're looking at gold, and gold seems relatively on a bullish trend. Maybe generally I would call it a bearish semi. Okay, let's have a trend line to see where we are. So this is 3%. It's a bit, the line here is giving us, okay, 3% down, but we've got the general idea 18 up. Okay, let's see if we think that gold will continue going down or up. Let's assume that we believe that gold is going to turn around. It's already becoming a bit bullish, so we can assume it will turn around. Now the question is, if we think it's good to buy, where are we going to buy? Okay, do we have a question about the entry? Let's see. Okay, how far? Excellent. So as we can see here, how far from the entry should I place a take profit, a stop loss and take profit? But the problem that I have with this question is what exactly an entry is, right? So an entry is where we would like to buy or sell, and stop loss and take profit is approximately where we would like to end the position. So in this case, when we're looking at the current price, 3,298, and let's suppose that I don't want to buy now, I wanted to buy exactly at the 3,300 mark. Okay, more than that, I don't want to buy it now or at the 33. I want to buy it again when it gets down to the 32.55 mark, 32.55. Okay, because I believe that if I'll buy it there, I need to grasp last price difference until my profit. Okay, let's leave it like this, and we'll make it white and leave a note to it, possible entry, like this. Possible entry. Okay, great. All right, and we'll also modify the lot size to 0.01. And now let's think about how to place the stop loss and the take profit. Excellent. So at the moment, since we are with a buy and we're intending to buy at 32.55, okay, and again, to help understand what's happening here, we're going to put down entry to 32.55. And we're going to select we're going to mark execute when price hits. We're going to write down here 32.55 as our entry. And it's important to understand that the function here, the pending order in here, acknowledges the reference that we see that is selected. So if we mark the box and we are with a buy, it's going to launch a pending buy. If this is marked and this is a sell, that's going to become a pending sell order. which means getting to that price will launch the position automatically for us, which happening as we speak. Now, to answer the question, how far away, we're going to write down here, take profit, stop loss. Okay, and with this in mind, how far away? Let's think about how far away can it be. Let's target our resistance of 3360. I think it's a bit high. Let's make it 3065. Okay, and now we're looking at 3365 as our take profit. Okay, this is the nearest resistance line. Paint it in green. Great. We'll make it a take profit 3365. Okay, and the stop loss, maybe look at the same ratio in here. We're looking at support 3121. Okay, and this is not bad at all. But how can I validate that those values actually make sense? Okay, so one way to check this is to investigate the previous candles and subtracting the differences between the two groups. Subtracting the open from the close, subtracting the high from the lows can give us an approximate difference of what happened yesterday, since we're looking at days. So we're going to do this together real quick. 3325.35 minus 3249.90. So this is the high and the low. We're looking at 75 and the 75. Okay, and between the open and the close, let's see it together. 3309.36 and the close is 3259.57. Excellent. So we've got 49. Now we've got 75 and 49.79. But unfortunately, this is only one candle. One candle does not cannot be considered as an average. One candle is just one candle. So in order for us to construct an average from the candles, we need to accumulate a good number of candles, a bunch of candles. Now, this can be very time consuming, and to start analyzing, subtracting all those numbers, and then we have to divide it by the number of candles we took, can be very, very time consuming. So another way that we can do it easily is to click on the indicators, then where it says type the filter, we're going to type AVE for average true range, click and drag it to the right. In here, we can simply design what length we're aiming for, and to determine how many candles are we going to withdraw the average from. So since we're looking at days and the length is 14, that means that 14 days will be considered to give us the average. If we type 10 instead, so that means now 10 candles is what giving us the average. Excellent. We can also change the color, click here save, and we've got the indicator applied. So we can see that the actual movement for gold per day is actually $55. So when we're looking at the numbers we took from yesterday, it doesn't look too bad. It seems like we are somehow in the range, right? A bit higher if we're looking at the total fluctuations. 75 is bigger than 55, but still it kind of makes sense to the levels that we choose. Now, let's see how far away the take profit and the stop loss are from our entry. In this case, we're going to use a calculator, and all we got to do is just subtract the values that we choose from the entry to know the difference. We can see that this take profit is actually $110 away. Stop loss, okay, let's see it together. Okay, great. And that connects perfectly with the result that we're seeing displayed to the right. How so? Because at the moment we acquire 0.01, which means 1 ounce, which means that with 1 ounce, every dollar that gold is moving for us, we're going to make a dollar. And for every dollar that gold is moving against us, we're going to lose a dollar. Therefore, since the take profit and the stop loss are $110 away, we can make 110. And if they are $134 away, we can make 134. So if we choose to extend from 0.1 to, let's say, 0.1, that means that the result will be multiplied by 10. And why? Because we have extended from 1 ounce to 10 ounces. Excellent. And then we can compare it with our trading plan and determine if this fits to our needs or not. Another thing that we can also do is we can estimate how long to hold a position with this. Okay, so to continue answering the question, first of all, let's see if we got the answer we're looking for. How far from the entry should I place? Okay, depending on the desired amount, profit or loss, we can simulate using the take profit and stop loss what can be the possible profit or loss and change the values accordingly. Okay, so we can move the take profit and the stop loss according to what we want to make. As in addition, we can also confirm the validity of how far that is using the ATR. So we can estimate or we can validate the expected time frame to hold the position based on the average true range. Meaning if, for instance, I'm looking at the moment, I'm looking at days, right? And I see that I'm expecting $110 away for my take profit to trigger. And we see that the average movement is only 55. Average movement for gold per day is 55, right? But we are looking for 110. So logically, if I'm expecting gold to travel 110 when the average is only 55, maybe I know about something fundamental that's about to happen. Otherwise, I can statistically expect gold to move 110 in maybe a couple of days, or maybe even more, maybe three or 4 days even. Because it's important to understand this 55 is not a linear movement. Is not a linear movement. It's not a straight line up or down. It can fluctuate in between. It can get to this 55 through the volume of fluctuations. Okay, so we shouldn't look at this 55 as a guaranteed solid number, but more as a range, as this indicator is called average true range. Okay, great. So we can validate the expected time frame. We looked at how far away it can be depending on the result we wish to make. And now let's see the following question. Support and resistance, we saw that. How long should I hold? You see, this is another question that with this method we can also, just a second, we're going to paste it down. How far? Great. Okay, great. Now, how long should I hold? Okay, so how long should I hold? It depends on the plan, right? So to answer this question, we actually need the other question. So we're going to paste that down. I think we're going to keep what we have with gold at the moment, just so we'll have it. And we will make a miniature version of a trading plan because we're not going to construct a trading plan in the next 24 minutes we've got. Okay, so let's begin with something simple. So we've got target, time, movements, and units. And this template can be multiplied as many times as you want to help you construct some basic guidelines. This is not a formal by the book trading plan, since we said we practically don't have the time for that, but we've already analyzed the movement. We can set a certain goal. Let's say that the goal here is $1,000. We're almost there. Okay, we're gonna modify a few things. We can also add here exposure, okay, and margin usage. So the time is not 1 day. The time we said is 1, 2 to 3 days. And the units that we have acquired is 10. The profit seems all right. The possible profit seems all right. Let's make it even a bit lower so we need less movement until the profit. Okay, and actually let's use this as the same reference and then quickly modify that to be less. Let's suppose that the exposure we want to have is 2%. Okay, it's 2%, so we'll make it only 20 less. That means 3235. Okay, and now let's write it down like this. Okay, and hold on, there we go. Okay, yeah, okay. The exposure is 2%. The units we're using is 10. We said the margin impact. Okay, so a quick way to know the margin impact is just to look at here. See, this is the necessary amount for us to open the position. And the way that it works is very simple. You see the value per ounce is 3,300. And because we're taking 10 of those, the value is the price per unit times number of units is how much this position actually worth. Now, if we wouldn't have leverage, we would need this much money in our account. But since we do have leverage and we are multiplied by 20, okay, so we can divide the value by 20, and this is the actual necessary amount. Okay, this is the minimum amount required available, free margin to open the trade, like it says on the message displayed in here. So to open the position, I need $1,650 available. Okay, so this is one composition with gold. So this is A, right? And I can make several parts like this, okay, for different instruments. Just use, maybe I like to also trade NASDAQ, and I also like to trade maybe Tesla as an example. So Tesla, right? And what I can do next is, I think I could have done it like this, and then it would be easier. No, we can leave the 1,000, we can delete this and that. This we can leave, this we can erase, this we can erase, this also, that is also great. So we can take this and then paste it in here, and we can paste it as many times as we want, and we can even put it in an Excel sheet or whatever we want. And then we have this nice guidelines which we can follow. Of course, all the parameters in here should and needs to be changed by your own personal references. As I said in the disclosure, those are not recommendations of what values to use, but it gives you the ability like this to estimate approximately how long am I holding the position, how much margin I'm using, what exposure do I have, and just help you manage your strategy a bit more organizedly, and nothing too crazy that we did here today. You saw that I used the indicators. Let's maybe recap real quick what's happening here. So initially we looked at gold. We saw that gold with the trend line we've marked from support and resistance have fluctuated. It was a bit more, okay, 18%, 18.3%, and we saw that the general trend is bullish, so we thought that gold is in a good position for a buy. Now, we targeted the green line in here, which so-called the resistance, near resistance. There are higher levels, as we marked as well. And we can validate this with a Fibonacci if we really want to add another layer for analysis. But if we don't want to, we just marked, actually, maybe I'll paint it in red and move it to the actual price. This should have been 35, right? There we go. Okay. There we go. Just maybe pull it down a bit. There we go. Excellent. And so, and this one will make it. Of course, the colors that I'm using are also my personal reference, and you don't have to use these colors. I guess it's pretty self-explanatory. Okay, so we saw that this is a good place for a buy. We clicked on the execute when price hits to bound a price for our entry. And we also selected the take profit and the stop loss based on the results we were looking to achieve. So we also modified the lot size from the generic lot size to 0.1. This way, we have 10 ounces, and with 10 ounces from our entry onto the take profit, we are $100 away. Okay, we are, this is also something we should have fixed. 33.55, yeah, and we are exactly $100 away. And for the stop loss, we are $20 away. $20 away times 10 ounces, we can lose 200, and we can gain 1,000, which is a ratio of 1 to 5. Now, if I want to proceed with this ratio, as I said, I can copy and paste the template that I wrote in here, and then to continue and fill it with the different various values of the other instruments that I am trading. Okay, so this is a nice way. What is a trading plan? Basically, that could be, again, this is only an example. Constructed guidelines. Constructed guidelines based on time frames and goals. time frames and goals. Okay, which provides an estimation about. Actually, I'd rather just paste. No, I can't. Unfortunately, if I'll do that, it won't be understood. But the point here with the trading plan is to give you some guidelines of not what to do or when to do, but basically the general approach. As you saw, we stated here those basic things, but this gives us guidelines of where to stop the position and what values we're using, just to manage things a bit more organized. Okay, so a trading plan is a plan. Maybe by choosing a target, time frame, exposure, margin usage, and what else we wrote here? And approximated expected movement. We can establish certain guidelines to help us design the position with logic that fits to our goal. Okay, of course, I don't have to do any of that. If I don't want to work with a plan, I can just do my analysis, place whatever lot size I want, and as long as I have enough margin, I can trade, right? This is not mandatory. It's not mandatory to trade with the trading plan, but it does save you a bunch of time to think if you're making a change or what this change will be, which can then have effect on your analysis. So just, and of course, a senior account manager can assist you making the plan, just certain guidelines for you to carry on with. Okay, and I think we have concluded the question. Okay, the last question we've got here is how long, right? So the how long part is actually very simple, because if we do have a plan, how long should we hold it? How long should I hold a position? Depending on the plan, right? On the plan. Okay, so basically, if I plan to make this $1,000 in a matter of, let's say, up to a week, and I've constructed the position, thinking that it will travel $100 in 2 to 3 days based on this average. So how long should I hold it for? Basically, up to 2 to 3 days, right? I can make judgment on the way. If to close it, I don't have to wait for the take profit or stop loss to trigger. I can close it a minute after or 5 minutes after. But since we have done some validation here with the ATR, and we've made a plan. Also, one of the things that I need to think about is how much money I'm making as compared to what I'm holding, to how long I'm holding. For instance, if the target in this case would have been 100, and instead of the time range we took, the time range should have been 2 to 3 weeks. Okay, maybe I would make the necessary modifications for the position to make more sense, because I don't want to wait 2-3 weeks to make $100. I mean, some maybe do, but for me personally, I wouldn't do that. Again, just using it as an example, let's maybe help emphasize a bit better what I'm trying to convey here. If this would have been to hold a position 2 to 3 months for $100, you agree with me that it can be quite ridiculous comparing to the first one, 2 to 3 days, right? Okay, anyway, I hope you guys get the point. There is not a lot of ways for me to explain to explain that. Maybe there is another way to think about how long to hold it if you don't have a plan, and that depends if you're losing or making profits. If you're holding the position and you're losing, of course you don't have a lot of choice. You can either hold it, or you can hedge, or you can close. Those basically the choices that you've got. If you're making profits and you don't have a plan, basically you need to think about how much profit should you make. Again, this I'm talking about the position that you're making profits on. So you can keep holding it and it will make you more profits, or it will turn around and will turn to losses. To understand better what I'm trying to explain here, we're going to use two rectangles with a certain range to what we expected from the take profit and the stop loss. So we're looking at here. So the green area at the top is our profit area, and the lower area is the red area. So now we're going to extend them both, and we're going to look at the lines, the green line and the red line, which I understand it's a bit difficult to see. Maybe we'll move it like this, and now it makes more sense. Okay. And yeah, now when we're looking at the green area, let's suppose we didn't have this as take profit. Let's assume we don't have neither take profit or stop loss. Okay, but still we have the numbers in mind to understand what could have happened if it reached those levels. So if it reaches, we are with a buy. Let's assume that we are with a buy, and it gets to that area in here, or even higher area in here. I need to think about where should I close it? Should I close it now, take my profit, or I need to consider the possibility that it might turn around? Okay, and when it does, if it turns around and go below the entry, my profit will become loss. Okay, so this is basically the kind of judgment you can make when you have a position that is open. If you don't have another guidelines like a plan, a defined strategy, as you know. And okay, so we're going to take the question in here, depending on the plan, depending on the plan and trading style. I can one option is depending on the plan and trading style. Second, make judgment depending on the how can I say that, current progress of your position. Yeah. All right, great. Like I said, the third slide is just to help us send you guys some links. So we're going to send you the links over the chat. But as I've explained, those links turned into buttons in the website, at least for some of them. So we're going to show you how to access those links from the website. This one is for a real account if you're still with a demo. And the last one is Academy. So we're going to show you right now how to access those things from the website. And before we say goodbye, I would like to share with you the special promotion code, the Q&A benefit, which you can share with your senior account manager, which I will also paste on the chat. Excellent. And now we're going to show you how to get to the tutorials in Academy from the website. So this is the default screen we said. We can always click in here on the clickable icon to get to the default screen. And now maybe it looks like this sometimes, as we said. Okay, and now we have the menus to the left. Okay, and at the bottom of this segment, we've got another part in here, 2 icons. The first icon takes us into the Academy if we're clicking on Academy, and the second one is opening the tutorials. And now we can enjoy various videos of different topics on the website without even just like this. We can click on play. And there we go with translation and everything. So just like that, we can enjoy, like I said, the content on the website and the rest of the content that we're showing you always by the Trading Central and Discovery and the news section. There are other webinars more directed to that. And unfortunately, we're out of time for today, but still I hope this webinar could help teach something practical and help you understand better a bit more. You're all welcome to join us to the webinar next week. And as I said, the recording of this webinar can be found on our YouTube channel, and so does a lot of useful content about risk money management and analysis. So for you guys to enjoy. So thank you for joining us today. Best of luck with trading. Have a fruitful week and have a good day.